Do you all know the secrets that those who make big money through stock trading know but retail investors will never know? Do you know the biggest misconceptions that cause retail investors to lose the most in the stock market? Today's video provides answers, but it's lengthy. Like and save it. First misconception: don't chase after rising prices. Sell when prices fall. Many people are warned not to chase after rising prices. Sell when prices fall when they first enter the stock market. This warning makes retail investors lose money. In the terminology of traders, chasing the rise and killing the fall is essentially following the trend. A qualified trader who can strictly implement the strategy of chasing the rise and killing the fall usually avoids huge losses. The real reason retail investors lose money is their unwillingness to cut losses. I've seen many retail investors suffer huge losses. Most of them were unwilling to cut losses when they had small losses, which gradually turned into large losses and huge losses. To avoid huge losses, with Gersha Kebab, we can wait for the next opportunity. Many retail investors are brainwashed by never chase after rising prices of kebabs, deeply imprinted like a golden-haired beauty, becoming the biggest lie in this market. The second misconception is that the stock market is an indicator of a country's economy. This statement can be said to be the second biggest lie in the stock market, second only to the previous phrase, never chase after rising prices of kebabs. Since the collapse of Bretton Woods in 1973, the market's fluctuations have had little correlation with a country's economy. In my initial video in 2018, I noted our economy's rapid growth in the past 20 years, while our stock market stagnated around 30 points. In reality, major institutions and interest groups have long controlled this market. Major institutions need to harvest retail investors, so retail investors' losses have nothing to do with the economy. The third misconception is that many so-called stock market experts claim you can reduce costs by selling high and buying low. Anyone who can say such things is either a fraud or a fool. As long as anyone looks back at a stock's trend for a period, they can know the high and low points. But if you are in a once-in-a-lifetime market, it is difficult to know when to sell high and buy low. Many times you think it is the peak and sell, but the manipulators push it to an even higher position. Due to human greed, many people will definitely be at a higher level. In this way, taking over the plate will actually increase the cost. So there is a law in the market that if the vast majority of retail investors think it is a high point, then it must not be a high point. Similarly, when most people think it can be super low, then it must not be a low point. Many people in the market think they are that 0.1% of geniuses are actually 9. Many retail investors can't earn. Many people don't grasp or desire to grasp these principles. They always partake in speculative operations of buying high and selling low, which raises their costs and leads to deeper losses. Finally, the last 18 still advise retail investors, without professional learning and training, not to enter the financial market easily. It's like going to a casino. If you can't see through it and don't understand it, you will definitely lose everything. When you choose to step in, you have actually decided your outcome. The stock market is a long road. I, Mao Shiba, wish everyone a prosperous stock market.